Hey friends, Lucian here with the Bullish Bears team, making the watch list video for tomorrow, Friday, September 15th. I'm making it a little bit early today because I have to leave a little bit early. Guys, these watch list videos, they take quite a bit of time to make. So the good news is when I make the videos, I try to pack in a lot of content, so there's a lot you can learn from. Bad news, if you're just looking for the plays, sometimes the videos are going to be a little bit longer because I'm really going in depth with the things I'm looking for, and that's what a lot of people have been asking for. A lot of people are really liking these videos, and they're asking me to go more in depth with support and resistance and patterns and stuff. So sometimes the videos are going to be longer, but they're going to be filled with content. And basically, when I'm making my watch list, it's basically my watch list, and you're looking over my shoulder. So when I'm mapping out support and resistance and creating these alerts, that's literally what I am personally looking at. So that's where if you just watch these videos, you really can learn a lot from what I'm doing with them. So, while the market is finishing up here, I'm going to show you again, just take a look at some of these from today. These alerts fired off. If you looked at the watch list, look at all these alerts that triggered. Not all of them are going to, come about, but many times what will happen is an alert will go, it'll be a false breakout. It might go up a penny or two, trigger, and then come back down. And then sometimes these things run for, 10, 20, 30, 40 cents. But that's really what day trading is about. It's all about using money as leverage. Not everyone is going to break out 50 cents or a dollar. But that's where learning how to short is going to be incredibly important. And I'm going to keep kind of stressing it in the videos and kind of talking about it more and more. But the first thing and the most important, probably the most important thing you could do if you want to get comfortable shorting, just open up a virtual account here with Thinkorswim and just practice. It's really all about practicing. That's going to be the easiest way to become comfortable shorting, because when you take a look at these watch lists and when you see when I put a trigger, you have a couple things that you can do. You can either, one, get in on the breakout for the trigger and go along with it and scalp with it on the way up, or two, you can let the trigger happen, watch for the pattern to form, and then short on a top possible reversal down. It's all a matter of what you're comfortable with. I personally, I'm more of a short bias trader, so I kind of like to look at these alerts and then watch them form a top, and then when they're reversing, I like to short them back down to the moving average lines and then potentially further down if there's a breakdown. Again, that's all my preference. So you can look at it either way, but it's very important to learn how to short, because when the market goes like a doji day like today and there's indecision, and like when you look at the market here today, it was like so much up and down, but it was technically a down day. So in the morning here, when a few of the stocks popped off, what they do is they immediately kind of reverse. And then when they reverse, the market goes down. So if you're wanting to go long and ride a stock up and the market's going down, many of the stocks won't run because a lot of these stocks move with the market. So that's where, again, shorting is super important. And it's just, honestly, it's the opposite of longing. So if you're buying a stock, so for instance, if you really want to buy a stock immediately, if you buy at the ask, you get filled. If you own the stock and you sell at the bid, you immediately get filled. That's basically how the market works on buying a stock on the way up. When you short a stock, it's just the complete opposite. Basically, what you would do is you borrow shares from your broker. Don't get hung up on it. It's not as complicated as that sounds. All you really would do is, in essence, sell the bid. If you sell the bid, immediately you would get filled. And then if you bought the ask after you're filled, it's just basically like you borrow the stock. Don't worry about borrowing it. Again, when you're day trading it, I would highly suggest, if you're learning shorting, don't hold overnight. Day trade it like you would normally day trading. So if you're doing that, in essence, you sell the bid, you get filled, and then when you want to cover your position as the stock is falling, ideally you're borrowing high, so you sell the bid where you're borrowing high, and then you're covering, meaning you buy it back at a lower price, right? So all you would in essence do, if you sold the bid and you immediately got filled, you would buy the ask immediately to cover. So that's that simple. If you're riding a stock up, you buy the ask, sell the bid. If you are shorting it on the way down, if you sell the bid, you immediately get filled, and then you would buy the ask to cover. Now, again, that's in theory with just trying to get immediate fills. It's very important to try and get, maybe use limit orders, look at level 2 time and sales, look for better entries, look at support and resistance. So sometimes you might, again, when you're buying a stock and going long, sometimes you might try to buy the bid and then, to get a lower price. And then sometimes on the way up, as the stock is going up, you might sell the ask instead of the bid, trying to make more. So many times that works. But buy the ask, sell the bid is usually an immediate fill. Same thing with shorting. If you sell the bid, you immediately get filled. Again, as long as the stock's not moving crazy, a lot of times a stock won't fill because it's moving. But in theory, that's what happens. But sometimes, if you're waiting for a stock to bounce back up, so it's falling, then it bounces back up towards the moving average lines or previous resistance. If you sell the ask, that might be a better price for you than selling the bid. But ideally, sell the bid gets you, or sell the bid would get you immediately filled. Buying the ask would cover the position. So just basically, what I would suggest doing is just getting a virtual account and just practice buying the ask, selling the bid on the way up, and then on the way down, selling the bid, buying the ask to cover, and just do that a bunch of times. It's going to take a few hundred times of just practicing getting in and out until you feel comfortable. But if you get comfortable shorting, then you can play stocks both ways, especially for days like indecision or these big red days. These big red days are great days for potential shorting. So shorting is not as scary as people think. It's scary to hold overnight potentially with a biotech or something like that, but overall it's not scary to short. It's just a matter of practicing. Just like day trading in general could be scary at first until you just get comfortable and you just realize what you're doing. But that's just really all about practicing longing, practicing shorting. And then a lot of people have asked, or I've had some questions recently about, support and resistance and patterns. There's no quick and easy way around it. It took me literally probably thousands of charts of looking at thousands of charts to finally see support and resistance. And sometimes it's still a gauge. So there's no easy way to really find it. You got to look at moving average lines and patterns. But when I make my watch list videos, I'm marking out these areas of support and resistance that I'm looking at. So when I mark these areas out, excuse me, pay attention to them, and then I set these triggers at a certain point for a reason, because when they fire off, chances are there might be a breakout or a breakdown depending on what type of alert I'm setting. So let's just take a look at a few of the alerts that I set today that fired off. You'll see KNDI. Let's take a look at that one at or above 515. So if I type in KNDI, so this one was a bit of a false breakout, but you could make a little bit. At 515, it triggered right here at the open, and it went up to 530 and then crashed right down. So you could say that's a false breakout, which it kind of was, but if you were quick on the trigger in that 5-minute candlestick, 515 to 530, that's still a 15-cent move. If you played the 1-minute candles, you could see right here, it was a very kind of went up, triggered right here. You could have sold right at the top of that one candlestick, right towards the high of the pre-market, and hey, that's still a 15-cent move. JASO. This is the one I was watching and treated a few times this morning. This is perfect. At or below 836. If I look at JASO, look at that. I knew this was going to happen either today or at some point soon, because you had all these green days. There has to be a pullback. Stocks naturally want to pull back towards this 13 EMA. And sure enough, look what happened right when it went right here. So you'll see it was, I'm not going to go over the patterns of it right now, but this morning I got in at 847 right here. It was a perfect entry right when it hit a double top, but I got in, I think, back here a little bit more. I got stuck in it a little while. So I got in over here at 847 and I rode this thing with the roller coaster. But here's what, very simple. When price gets up to this level, right? If I sell the bid, right? So I think I got right around in here, 847 here. So right when this red candle formed here, you'll see I was waiting for it to pull back. So I got in and I sold the bid at 847, right? Worst case scenario, if it went back up and broke this high, I would have bought the ask, let's say, and covered. Obviously, I'm going to try and get a better deal, but immediately to cover, I'd buy the ask if it went against me. Hey, stocks go against you all the time. So if a stock goes and breaks out, many times it'll break down. So if it breaks resistance, previous resistance is now support. If it falls below previous resistance, and then it reverses, previous resistance is now resistance again. If it breaks it, then that becomes support. So I'm going to show you some of those examples. But when this one right here, I kind of waited out throughout all this, maybe a little bit nervous because I thought it was forming like a bull flag here, and I thought it was going to break out, but it didn't. It kind of went, traded sideways, went up again, a little false breakout. Sometimes it'll do that. It'll go up a penny, maybe two, and then boom, it collapsed. And as you can see, if you had watched that alert, at or below 838, right here, previous day's close price, and look what happened. Let me go over here to the 5-minute. At or below 838, look at this. You could have followed it all the way down from 838, and it went all the way down to 788. So that's whatever, I don't know, what is that, 40, 50 cent move? That's a huge drop. Now I got in up at 847, could have rode that all the way down, and then when it forms this big green candle like this, you cover if the stock price, goes and breaks that candle. But again, it's all a matter of what your risk management is. If you want to ride it all the way down, you can see it kept making lower highs. So you see lower high, lower high, lower high, lower high. This one created a false sense of like it was turning, but then it fell down again. It's all a matter of your risk management. But that was a great short. If you knew how to short just by practicing, that's a great one to short all the way on the way down. TTOO at or below 677. This one right here, I looked at this one again because look, this was running up for a few days. It was right at the yearly highs. Let me just see here. It was right at a whole dollar amount, right below $7. This is an inverse head and shoulders, left shoulder, head, right shoulders, neck breakdown, right break line at $7. That's why I put an alert here at $7. If it broke there, then it's a potential breakout. But what it did is it broke down. So at or below 688. Once it did that, you'll see right here. Let me see, 688. Is that what it was? Oh, 677. 677. Go over here to right here. It opened up right below yesterday's close, and you could have wrote it down. Let's say you waited for this bear flag to form and then shorted it, let's say right around here, 661, all the way down to 588. That's a 60, 70 cent move right there. That's a huge drop. And you could just like watch it, bear flag on the way down. So bear flag, bear flag, bear flag, and then it kind of traded sideways. And that's it. So like these alerts are super important. But again, I just highly encourage you practice shorting for when reversals happen, or when the market's on a down day, or when reversals happen. But when I start showing these alerts, when you see the alerts at previous resistance, when a stock breaks resistance, that resistance line now becomes support. So if it breaks out and immediately falls below it, it's breaking support. You ideally want to get out to cover yourself and protect yourself. But it's just all a matter of what you're comfortable with. Some people like to get in right when the market, opens up, a bull flag happens. A lot of people like to get in, just ride it on the way up. And then if it breaks a support line, they'll get out. And then there's other people that just like to let the patterns form, let it form a top and find a reversal. I'm more comfortable doing the reversals at a top, but that's just my personal preference, right? So, all right, let's get into this watch list video. Let's see if there's any I want to keep from today. There we go. Look at that, huh? All right, so let me, I'm going to change this to tomorrow, this date, but I'm also going to keep some of these on here because I just want to see if I'm going to keep any of these from today on there. So TANH, this is a perfect example of one that I would absolutely keep an eye on to play both ways. Overextended, at some point it's got to pull back. Who knows when? But you want to see this break above 439, okay? If it breaks above 439, let me just make that red. That's resistance. 439 is at basically yearly resistance. If it breaks above, then then you want to get out, obviously, when it creates potentially a lower high. But you got to be careful. Something like this could easily turn really quickly when it's up at, like, when it's overextended like this. So I'd probably put a support line. I definitely put one right here at this 13 EMA at 358. But then I'd probably put one right around. Actually, I don't even know if I'm going to put one at $4. I would keep an eye at this thing if it falls below. So here's what I'm going to do. I'm going to put an alert from at or above. Excuse me, at or above 438. So, and then I would put one at or below, let's say 436. So when I create an alert at or below 436, that would mean I would take it short. So if it's at or above, actually, what did I do them both? Yeah, at or above 438. That basically means if it breaks 438, I'm looking for it to anticipate breaking 439 to go up further. But at or below 436, which would be below today's close price, that would mean I'd want to potentially take it short. So this stock could easily go down to the 358 or somewhere halfway down. Could be a decent short. That's one you got to watch out for. I get nervous playing stocks long on this at a yearly high because you don't know how high they're necessarily going to go before they pull back. They might have a really nice pop. I like to wait for them to find a top, then find a reversal down. So this could easily go break up, whatever, another 30, 40, 50 cents really quickly, find a top, and then reverse and fall right back down. That's what I like to see form. But perfect example, if this stock breaks 439 and you're taking it long, then if this goes up and immediately falls below this 437 marker, then you want to get out because this thing could fall really quick. So resistance then becomes support. If a stock breaks it, then it becomes then this area becomes support if it breaks above and falls below it. Now, if you were to take this short, so let's say I shorted this at 436, and then immediately the price then kind of formed and started to turn around like it's a breakout. Now 439 or 437 or whatever this is becomes the new area that I would cover at. So if I shorted at 436 and now it didn't start falling and it reversed and wanted to go up again, then I would buy, let's say, the ask, let's say, if price started breaking this 437 or 438 to cover my position. So it's just all about looking the support and resistance. Again, if a stock breaks above this area and falls, this is the new support line. If it breaks below it, you cover. If I want to short right here, let's say the stock gets indecision, let's say it's touching 439 tomorrow and it looks like it's fading, and then I short it and the stock goes down, great. But if I short it and it starts falling down and then all of a sudden it reverses and goes back up, then I would use this area now to cover my position. If it breaks that 439, I'm going to cover to protect myself. And that's really it. It's just all support and resistance and managing risk. So all that to say, I am going to look out for TANH because this is a potential. I like it for a real nice short, but even if it breaks above this marker, if it goes up to 450 or 460, I like it because it could still pull back. It all depends. Again, it's very important to watch the market. So I always have an SPX chart up here to see what the market is doing. If a market's having a down day, there's more of a chance that these stocks will pull back. If the market's going green, it's going to break record highs, then chances are the stock can continue running up. So always keep, ideally, an SPX chart up or a Dow chart up to see what the stock market is doing. Again, a day like today is indecision. You don't know what's going to happen. Is it going to break 2,500 tomorrow, or is it going to fade? You just don't know. This is kind of like a cup and handle position right here. A cup kind of by the handle. It could either fade or it could break out. So it's important to look at the SPX while looking at these stocks. So all that to say, TANH, I'm going to look at it. It's going to go on my targeted list. SHIP, don't even like it. I looked at that pre-market. Let's see, EVOK. Do I like this one? Don't love it. ITEK. Don't particularly love that. NXTD. This one kind of traded sideways. It's kind of got that. I mean, this could continue running. Small candlesticks could go up. I mean, it is finishing at the highs. I might actually keep NXTD on the watch list. Now, see, this is one that didn't have a huge day finishing, but it's right at this marker. If it can break 260, then, well, then ideally you want to see it break 287, maybe this $3 range. So basically these areas right here, you want to see it break. So I'm not going to actually put it on here because this is one I wanted to see break out today and it didn't. So I'm not really particular in wanting to watch it, but you got to watch these patterns, see if it's going to break out from there. I'm not going to put that on the watch list. I don't like it. AMRS, no, pull back. XXII, nope. JSO, it could still fall, but I don't like that crazy long candlestick. SSII, nope. AGEN, nope. BLDP, nope. I took this one short at one point this morning as well too. Perfect example with this one. This one was like super way up there at yearly highs. You don't know how far this thing could go. But look what it did. It did break 475, went up a little bit over $5, and then boom, this thing came crashing back down. And it's a nice short when you can find that entry. Let me see what's right over here. You know, when it closed below, so when it went all the way up, and then it came back down below previous close price, be careful right around here, because if price then rejects, a lot of times there's fake outs. This would be red to green if it closes above the previous day close line, or green to red if it's below it. If it spikes up and then comes down below previous close and then closes down here, then that's green to red, a nice bearish play, and then you could ride this down and look, bear flag, bear flag. So what you do when this starts to fall, you can wait for it to kind of pull back towards the 13 EMA, and when it rejects, I think I got in right around here, you can follow it back all the way down. So you can see right here, this would have been 462 down to 425. That's a great move. That's almost a 40-cent move. That's all about when you do shorting and bearish plays. BLDP, I'm not going to put it on. TTOO. Nope, so let's go to tomorrow's watch list. Again, sorry this is going to be a little bit longer of a video, but I'm just trying to show you guys support and resistance in these plays. I'm also doing some filtering here. I'm putting it at a max of 50 million for shares outstanding to get stocks to move a little bit more. I vary this all the time depending on what's going on in the market. I'm trying to make my watch list a little bit more targeted. Sometimes when you get in these higher float stocks that have over 100 million, they just move like a snail. So it's just, again, all a matter of what your preference is. But like a stock that's overextended over 100 million or something like that, I would definitely take a look at that for a potential pullback. So actually, I'm going to do my scan. Let me do the new highs one. New yearly highs, or new highs right here. I'm going to do this at $10. I feel most comfortable trading stocks that are at no more than $10. But actually for right now, I'm just going to put it, because I have it set up. I don't want to mess things up right now. I'm going to do, I'll keep that the same. New highs. And I'll show you what I'm doing in a bit. Okay. So let's go to the scan for tomorrow. Where am I here? Goodness gracious, I do so many of these nightly scan. Let me go here. Nightly scan, 50 million. Okay. So stocks between 30 cents, $10, minimum 300,000 shares, 5-cent gain on the day, maximum shares outstanding 50 million. The reason why I do this, ideally, I want these things to move. I want them to either break out or break down quickly and not ride them like a snail. But if I'm shorting something at a top, I might look at ones that are a little bit higher, over 100 million or up for a potential pullback. So I just want to see what pops up on this watch list and see what happens. This BITCF, this one, I don't like this one because this one trapped a lot of people a while back, and I think this stock had got suspended or something. Halts trading. Don't like it, not even taking a look at that. I would stay way away from this one if you got caught up with this. Look what happens. That's ridiculous. That should just not happen like that. That's a bad stock. That's BITCF. Great one to look at right here. Wow. So, perfect example on this one. I love seeing this. Look at that. Look at that. So, what I would do on this one right here is, I don't think this thing's breaking above 1105. If it does, I still wouldn't trade this thing because it's just, I don't like it. So what I would do right here, I would totally wait for a short on this one. So it may break, who knows, it might go 11, 20, 30, 40, 50, whatever it is. But look at this big candle. That thing's going to want to fall, and it's going to want to fall hard. But it's just a matter of when. Obviously, you want to see it. This can fall really hard. This is an area of support here, and then it could just really fall all the way down right to here. I mean, this could really fall and pull back. So I want to see ALDX. I want to see this at or below 1079, which is a penny below today's close price. So if this thing drops, at any point tomorrow below 1080, and this thing reverses, goes green to red, this thing could fall, and that could be a beautiful short. So I don't even care about it going upwards. I just want to see it on the way down, and that's a way to make a ton of potential money by shorting it on the way down. So, perfect example. Obviously, you'd love to try to get a limit order or something like that to find the right price, but if the spread is good, not like this. The spread is ridiculous right now after hours. But if you found a really tight spread, 1, 2, 3 cents, and you shorted that thing, let's say it went down to 1079, you shorted it at 1079. Let's say you sold the bid and shorted it. If it reversed, and let's say it dropped a little bit, and then it turned around like it was going up to around 1080 again, you would buy the ask to cover. That's really it. So it's not scary. So if this thing went up to 1150, you wouldn't short it at 1079 and let it ride up to 1150. That would be scary, and that would be a dumb move to do. But managing the risk, let's say this thing opened tomorrow, was hovering around, the previous day's close price. It dropped to 1078, 77. You shorted it. Let's say you sold the bid, you shorted it, and now it reversed. Then you would just go again, buy the ask and cover it, and that's it. It's not scary to short. LMFA. Don't like it. Tops, nope. SVRA, yep, like this. For this reason here, it's approaching yearly highs, multiple green days, and I want to see this thing, and I don't want to take this long. I would like this as a potential short. So, and I already kind of pulled back right below that 990 marker. You'll see this a big pattern, kind of like a double bottom area. So now I like this one, SVRA, at or below 939. So obviously you closed it at 940. If this thing falls to 939, I want to take this thing down. And I mean, my goodness, this could really fall. It could fall all the way down here. Be careful at whole and $half amounts, but this could easily fall back down to 724. Not saying it will, but it can easily give that all back. So SVRA. I'm looking at it to short. I would never take this thing long, even over 10 bucks. You just have to be careful with it. Now, if it broke $10 and was kind of staying up there, you could risk it, but I personally wouldn't. Let me see here. Potential really nice shorting opportunities. And also, too, remember, tomorrow's Friday. Who knows what will happen? Maybe the market will break record highs. Maybe it'll start to sell off a little bit. Maybe it'll give back some of the gains. Maybe it tends to, markets tend to pull back a little bit on Friday. So these might have a way of pulling back. So these three could really pull back. CATB, don't like it. FPPP, don't like it. RELY. Don't love this pattern. Now, other thing I want to show you guys too, I'm going to start introducing you guys to these. This is DOS. This is the platform I use with trading, and I use Interactive Brokers with DOS. So I like to put the stocks in here, see if they're a stock that's they're not the 5-cent increment ones. So right here, perfect example. It's not shortable. It's a 5-cent increment one. So ALDX. Now I'm going to go and I'm going to immediately take it off my watch list because I don't even want it on there. I can't even short it, and plus the 5-cent increment, so I'm not going to do it. SVRA. Meant to show you guys this in the beginning. This one is, so I will keep that on the watch list. And let me go over to this one. The reason why I said it is that one, what is it? RELY. I want to take a look at that one over here and see if this one is a 5-cent increment one, because it just looked like weird candlesticks. Yep. See that? 5-cent increments. Don't like it. And why did I see that? Because I saw these kind of crazy candlesticks. And look, I don't like that. So while I may have put it on the watch list, I'm not going to, because I hate these 5-cent ones. EVEP. Now this one, this is a potential one to put on there. Let me take a look at it over here. EVEP. Yeah, so I would actually put this one on the watch list. So what I want to do is I want to see it break 58 cents. So 58 cents. I'd put this one, there's a little bit of resistance, but now that it's over 50 cents, I would start looking towards the dollar range. Not saying it will go up to $1, but keep an eye on it. Potentially could. There's really not anything crazy in front of it. But if you put an alert, I'll put an alert at 57. At or above 57. Create that there. Support could be right around this 51 cent range, right around that, 48 to 50 range. So this one could, if it breaks out above 58 cents, a perfect example. If you take this, the alert fires off. If it breaks above 50 cents, at any point, if it turns below or like it's heading below 58 cents, cover and protect yourself. Now, again, it may drop to 56 and then fire off. That's all about risk management and what you're comfortable with. But, just keep an area. That's what you're looking at for support and resistance. So EVEP. I'll put that over here. I'll go more into DOS another day. I'm becoming a lot more comfortable with it. I like their platform, I think. So this one right here, I would like to see this one break this 207 marker. I would put an alert right around 205 or 206, maybe 205, 206. I want to see it break 206, and then if it does, this area would be support. So it's got to break this 192 level first, and as you can see, there's some indecision. But once it breaks 192, it's near a whole dollar amount, $2. I don't know, it makes me nervous. I want to see it break this 207-ish marker. If it does that, then I would potentially get in, and that's why I'm putting the alert there and not down over here. I don't want to get into something and get trapped right before $2. But I would put CLRB on the watch list because there's a potential for a break. It all depends what the market does. If the market goes red tomorrow, then it might be more of a shorting day. KIQ, nope. FMC, KJ, no. LYTS, yep. So this one, want to see it break above today's high. Look at this, no coincidence, 650, half dollar amount. Want to see it break 650. If it does, then be very careful. Look at that, close to $7. That 697 marker of resistance. If it can break, I'd be very careful there. Again, this 50 simple moving average. But if it breaks that 650 marker, put an alert, maybe around 648. That could be a nice breakout. 50 to $7. If it's a nice bullish day and goes up, that could be a really nice bullish play. If not, then I would look towards taking this short, and I would look at covering around $6. But if this reverses and it's a red day tomorrow, 647 down to potentially $6 of a support area, that's a very nice move. And you can see it's bull flagging here right at 650. So I definitely like that. LYTS. And let me go over here to DAS. LYTS. Perfect. Fork. Don't like it. PXLW. Yep, potentially here. So, so this one, I'd like to see this one break ideally. This 517, 520. There is some of this area here that I would like to see it clear. I would give it potentially this 517 marker. If it can break above this, then I would consider taking it long. And then I would say probably right around this area, 590 is probably kind of support areas right here. So I want to see that break that 517 area. I'll put an alert 516. So you want to see it break above this. If it breaks above there, then that's going to be the area of support. And then who knows, it could fall down here after. So, again, you got to be careful of this area for it to be a potential breakout. So PXLW. MARK. Man, let's see. This one. Look at that. It's having a tough time getting above that 420-ish marker. That could be a really nice short. Let me take a look at mark over here. MARK. It is shortable. So with this one, you want to see it break that 420 marker. I'd be nervous around 450, right above. Let's see, right around that 450 marker I'd be nervous of. So I'd put that as critical resistance. And so I'll put an alert. I don't really love this one. I don't like this for going long, but it could be actually an inverse head and shoulders right here. Left shoulder, head, right shoulder. It's pulling back right at 403. So now that I notice that it is above 403, so I'd want to see it go. I personally like this one for a short. So I'm looking at this one at or below 399. I don't care about this one on the way above, at or below. I'd like that for a potential short, because if that falls, you know, right down to 350, $4 to 350, and then it could easily go right down here as well to the 13 EMA of 316. So I like that as a potential short on the way down. I don't really care about that one on the way up. So MARK. Let me see here. And ADVM. That's another one. 345. A little bit kind of choppy for me. I'm not liking that one too much. TANH. I already did that one. AVIR. No. ABNAF. No. SITO. No. FNMAS. No. Gene. Don't love it. MICT. No. HPJ. No. AGRX. Don't really love a lot of these today. No. FVNCE. VII. APVO. Some of these low floater ones are not going to be as nice looking of a chart. Again, it's all the matter of your preference. But you also don't want a ton of stocks you're just necessarily watching all the time. So this one right here, I'd like to see it break 150s. Not going to put DEST. I don't love it. BUR, no. SHIP, nope. HMNY, nope. VTL. I don't know if I saw that one before. It looks familiar now. GIGA, nope. EKSO, nope. Now let me look at some of these yearly high ones. ALDX, I think I already looked at that one, but that's a 5-cent mover. FENG, FENG, perfect. That's what I'm looking for. So FENG, this one right here, perfect example. Let me take a look at the yearly. So this one could still go up, but you want to see it, number one, break 571. So if you're going to go long on this one, you want to see it break 571. I'll put an alert 569. I personally like this one for a potential short. So if this thing goes from 562, this thing right here, I would look, if this thing falls below 562 at 561, let's see, create an alert at or below 561, I would take this one short, looking to cover, you know, it could fall right down to 527, 561 to 527. It's a decent move. It could fall potentially further as well. Who knows? Again, on a Friday, I might be a little bit more inclined to take something short on a pullback. Not saying it won't go up, it won't bull flag, but I personally like FENG for potentially on the way down. But doesn't mean you can't play it bullish. I'd be careful around $6 if it breaks that 571 marker, though. Because who the heck knows what'll happen. But watch it. If it breaks 571, then 571 will become the new area of support. ZAGG, it's over $15. NR. Actually, let me go over here and put that in. All right. NR. Let's take a look at this one. Nope. 5-cent increment. Don't like it. CGNT, no. IGD. ABEV. CDXC, ELY. I think that's it. So I'm trying to make them a little bit more condensed. Sorry the video was too long. I'll try and make them shorter too as well. Again, I'm trying to give you guys really what I'm looking at. Really, all I just did right there, guys, is I just pretty much built my watch list with exactly what I'm looking for tomorrow, when I'm potentially looking to trade. And then I'm going to look at the ones with trade ideas in the morning and kind of look at those ones on that watch list compared to these ones, and then pick my plays. You don't want to have a million different plays. You want to get ones that are ideally going to move, and they're either going to move up pretty nice or move down really nice. So I try to get a healthy mix of shorting with potential longs. And again, I sorted it by the 50 million shares outstanding, so these ones could potentially move. But you can look at ones that, are over 50 million that could potentially move as well. But I just want these watch lists to be targeted and to move good. So just wrap this video here. Again, if you have not been over to our fan page yet, make sure you go over to Facebook. We're the Bullish Bears, both on our group and our fan page. This is our fan page over here. Our group is called Stock Market Community. I have a secret as to why I named it Stock Market. But we are the Bullish Bears on both of them. But make sure that you like and follow our fan page, because before 9 a.m. every morning, we do post trade ideas, trade ideas watch list, and Benzinga's news. We post that before 9 a.m. every morning. We highly recommend, when you can afford it, purchasing trade ideas and Benzinga. Make sure that you purchase them through us, because not only do we get credit for it, which helps us to grow as a community, we can also get you discounts, community discounts of 15% off trade ideas and 25% off of Benzinga. So make sure you purchase from us. These are two highly reputable, great companies. Trade ideas is our scanner of choice, and Benzinga is our news site of choice. They're both fantastic tools. They're around $100 each before the discount. So obviously we're posting a lot of content with our tools and saving you a lot of money from having to purchase these tools. But at some point, even though we are posting these things, you do want to have a live scanner, because sometimes, something's going to be running live market hours that's not going to be in our pre-market scanner. And there's also news that comes out during the day. So it's nice to have a news scanner as well. But again, we're saving you quite a bit of money by posting this every day by 9 a.m. So take our watch list that I do every night with the videos, see what I'm doing here, and then do the same exact thing with trade ideas. Look at ones that have volume, that have news, that might potentially run up in the morning, and put those on the watch list. So pick a couple you like on the watch list from tonight, and then a couple or so from trade ideas, and then see which one is going to move the way you want it to move, and then potentially trade that. So again, make sure that you like and follow our fan page on Facebook. A couple other things. Go over to our website if you haven't already. Make sure you subscribe to our nightly watch list here by email. We do send out the watch list as well as trade ideas options movers for the day at night. So you want to make sure you get that email over here. As well as, if you haven't joined our trade room, you can join our trade room over here. We have a trade room with well over 500 members in there now, and we're providing our trade room for free to our members, which is just, it's crazy. It's kind of unheard of. If you've looked at trade rooms in the industry, other trade rooms cost at least $100 per month. If you do the math, $100 a month times 500 members that are in there now, that's $50,000 a month in income we're giving up right now. That's absurd, but it's, again, Tim, Dan, and I's vision, where we ideally want to do something different. Ideally, we want to be a non-membership based company, and ideally we'd like to partner with major companies down the road that will pay us basically for sponsors, stuff like that, to basically pay us an income to give you guys more training and everything in the stock market. But we're giving up a massive amount of money to do that. And the only way that we're able to survive and grow to that point is by your monthly contributions. We're basically looking for our community members to basically all pitch in and help us to continue to grow. Again, there's Tim, Dan, and myself. Money doesn't go very far between 3 people with families and expenses. So rather than charge you $100 or $150 a month for, again, just our trade room alone, never mind our couple $1,000 worth of courses, our watch list videos, all of this that we're providing to you, we're not charging you guys for any of it. And in return, we're just looking for everybody to pretty much donate, which is basically the model that you see a lot of people doing online and YouTubers, stuff like that. They rely on contributions and donations. So we can't promise that we won't charge membership fees someday, but ideally we don't want to. So if you're on a budget, you'd like to chip in, we do have monthly options for as low as $25 a month, $10 a month. We believe that we're worth at least $100 a month, but if you're not able to afford chipping in that amount, then, you know, $10, $25 a month, whatever is affordable to you. Every little bit counts. We do appreciate your donations. And last but not least, make sure you subscribe by clicking the subscribe button on YouTube and click the little notification bell icon to make sure that you receive our videos when we post them. Again, our YouTube channel is absolutely exploding, over 6,300 subscribers, lots of people joining daily. So again, make sure you like our videos, comment on them, share them. We do our best to be interactive. So again, sorry this watch list video is a little bit longer, but you guys have been asking for extra content, and I'm trying to deliver it for you guys. So hopefully this video helped you guys, and happy trading tomorrow. Enjoy.